We developed something called purposeful asset placement. It's really just a method of allocating assets initially whenever we bring on clients. We really categorize them into three different sets of monies, or three different types of monies.
Welcome to Sterling Insights, Stand Out and Supercharge Your Assets, the go-to podcast for financial advisors aiming to grow their assets under management, stand out in a crowded market, and retain assets nearly forever. Are you advising high net worth clients who own appreciated capital assets? Do you want to help them sell without losing a quarter, a third, or even more of their hard-earned profits to capital gains taxes? Then this podcast is tailored for you. Each episode brings you the latest strategies and expert advice from leading financial advisors, seasoned attorneys, and experienced CPAs. Learn how to maximize your clients' wealth, minimize their taxes, and supercharge your advisory practice with actionable insights. Join us on Sterling Insights, Stand Out and Supercharge Your Assets, where you'll gain the knowledge and tools to set yourself apart and achieve unparalleled success in wealth management. Subscribe now and empower your practice for a brighter, more prosperous future. Welcome to Sterling Insights, Stand Out and Supercharge Your Assets. I'm your host, Roger Silk. Today, our guest is Michael Martin. Michael is a partner and the director of investments and insurance at Legacy Financial Partners. Throughout his career in the financial services industry, Michael's investment philosophy for his clients has always emphasized the importance of making money and saving money as safely as possible. The cornerstone of his philosophy is a primary objective of risk mitigation and value-added growth. Michael, thank you very much for joining us today.
Sure, thanks for having me. I appreciate it.
It's our pleasure. Look forward to chatting with you here. You and I have known each other for a while. I understand you went directly into financial services kind of right out of school. Can you share a little bit about your journey and your experiences in the industry and kind of how you arrived at where you are?
Yeah. I wouldn't say directly right out of school, because I did actually go to school for psychology, and I wanted to help people in that regard, but really just I got led down a different path soon afterward. And I was speaking with my father one day, who actually was a general manager, or who used to be a general manager for MetLife at one point. He goes, why don't you get into insurance? And I definitely didn't want to get into insurance, but I ended up getting in, and I partnered with a gentleman who had a team where they went around the country helping very high net worth people with estate planning and tax planning and different things like that. And you had to have at least $10 million or more that he was able to work with at the time. So I was introduced to very advanced planning right away. Eventually he retired, and I was then the person that was called in to help these high net worth clients. And then I really wanted to focus on building a business in Florida, and that's what led me to opening up Legacy Financial Partners.
So is it the case, Michael, that your kind of emphasis on safety kind of related to the interest in psychology and how people think and feel about these kind of things?
I would say that did have a role to play. I will say that I've learned that as humans, we typically like to have our cake and eat it too. Typically investors, and it really doesn't matter what level of investment experience they have, most investors are very emotional about their money, as they should be. I mean, money is pretty personal. And so, while they do want growth, they do like protection as well. So it's really about trying to figure out different strategies that we can use to offset risk, but still enable growth.
So obviously you talk about making and saving, which is building wealth.
Sure.
And the safety, and sort of how did you come to focus on that as opposed to many other things that you might have focused on?
Somebody told me once that my job is not to make you wealthy, it's to keep you wealthy.
Mm-hmm.
And I think that that really resonates with a lot of our clients. We're there to help give them ideas as to how to build wealth, but ultimately it's their job to do so. We want to make sure that we're limiting risk in order to help people, especially in retirement, because we deal with a lot of retirees as well. So it's really about helping them try to reduce that risk, especially sequence of returns risk and things like that that really affect you in retirement. It was more about trying to make sure that we even that out enough to where they are able to safely take withdrawals and have some more predictability.
Do you kind of have a philosophy or an approach to risk management that you bring to your advising of clients?
So we developed something called purposeful asset placement. It's really just a method of allocating assets initially whenever we bring on clients. We categorize them into three different sets of monies, or three different types of monies. So you'd have advisory accounts, which would contain stocks and bonds and everything else that you would normally have in an advisory account. And we typically take a little bit more risk with those types of assets because we do limit risk by using other safe types of assets like CDs, annuities, different. Right now that rates are actually at a reasonable amount, you can actually make some money on CDs and cash. So we haven't seen that in quite a while. But we'll use assets like that to take risk off of the table, off of the advisory assets. And then sometimes we'll use more alternative assets like private real estate investments, could be non-traded preferred stock. There are a lot of different types of assets that would qualify as alternative assets. And so by doing that, it really does give us some diversity with respect to growth, also risk. Depending on how the accounts are taxed, it can give us some more diversity as far as the tax rates that are applied to these types of accounts. And so that strategy has really worked well for us and has resonated with a lot of our clients in both good and bad years. So in 2022, when the market was down, a lot of our clients weren't sweating it as much as some other of their neighbors would have been. In that same respect, in 2019 and 2020, 2021, 23, and those positive years, they were able to see some real growth and they were very happy.
Is there something perhaps that you've learned about risk management that you know now that you would have wished you knew when you started?
I'd say that risk is a kind of a dirty word when it comes to financial planning because it's so subjective, right? So
Mm-hmm.
when I say risk, you have a different perspective as to risk than I do, right? And we will have a different perspective as to risk compared to retail investors. So I'd say that the one thing that I have learned is that people are pretty emotional about their money. And so it's that coaching that I've had to learn over the years. You have to really coach people in order to not make bad decisions with regard to their money because they can make those decisions in haste. Just recently, Japan, the market was down quite a bit. And I had one client that gave me a call and said that they had sold a lot of their stock. And it ended up being a mistake because our markets were barely affected. But then because that person's in retirement and because money's emotional, people can make those decisions in haste. And I think that our perceived risk is really something that I've had to learn how to coach to clients because in psychology, there's perceived risk. So for instance, my perceived risk of driving a NASCAR car would be very different than the person who's actually trained to do that, right? So they might not think that there's as much risk as they may think that the stock market has, right? So that's something that I've had to learn over decades. It's a real tough thing to learn and to make sure that you're able to actively coach your clients because they're really ultimately in charge of their own money, right? And so those decisions and getting them to not make those hasty decisions is a little tricky sometimes.
For example, Michael, if a new prospective client comes to you and they tell you, I've heard that you can really help me with managing my risk. Say you sit down with that person for the first time, how would you engage with that prospective client to start giving a view of how you handle the approach to risk?
So at our firm, we're a little bit different because every client that we represent goes through a process where we try to come up with a financial plan because most Americans don't have an actual written financial plan. So we really do it kind of, it's almost like sitting down with a doctor the first time that you meet them because they don't have any idea of what your health history is. So they've got to take in that history. So what I do is I typically start out by taking in that financial health history. And once they give us the information that we need, what I'll do is I'll kind of run tests on it the way a doctor might run tests on somebody after they give blood. Now, of course, nobody needs to give us blood, but we'll take that information, we'll put that into our systems, and we'll come up with a treatment plan for them. And that treatment plan will have to do with their investments. But then there are a lot of other risks out there, like, for instance, health. That's a risk, right? And then the way that you leave money to your heirs through legacy planning, that's a risk. You've got tax. That's certainly a risk. No matter whether it's Democrat or Republican, tax is one of the biggest risks I think that we're going to have over the next 10 to 20 years. So that's certainly a risk. So where's cash flow coming from? How are we generating that cash flow and how dependable is it? We call it the big picture blueprint at our firm. And I actually wrote a book about it. It's a blueprint to how we manage your financial life and how you're going to manage it. Big picture, meaning that we're not just talking about the investments, we're talking about a lot of other things in your life that we're going to help with. So that's really how we'll try to mitigate not just investment risk, but then long-term risk of them running out of money, making sure that we have a reasonable expectation of growth, and so on and so forth.
Is the book that you wrote something that you want to tell us a couple of words about?
It's a book I wrote during COVID, during 2020 and early 2021. And it's really just a book about our financial planning process. It's called The Big Picture Blueprint for Retirement. It's on Amazon. We've got a lot of clients who've read it, but it really just details in more layman terms at times, and sometimes it gets pretty specific, but it just details the retirement planning process. So it's not financial planning in general. Like, if you're a business owner and you're looking to sell a business, the book may or may not be for you. At some point it will because you're going to be retired, but it's really for people who are looking to retire and go into that part of their lives where they're going from that growth model to now grow and spend. And it helps give them some ideas as to at least maybe the method behind our madness.
Is there any particular idea or concept or thought that you try to be sure to share with all of your clients?
Oh, that's a tough one. I would say that the financial plan itself would probably be the thing that we try to make sure that we just kind of ingrain in their heads as a necessity, because it really is something that we review with them all the time. If a client sits down with me and during a review, we're going to obviously look at their investments, but then we're going to make sure that we update the financial plan, make sure that there's nothing else going on out there that I don't know about. Because, if you were a client of mine, between me and you seeing each other could be, depending on what your needs are, we could see each other every 3-4 months, or we could see each other every year. And there's a lot that can happen during that time, which you may or may not think pertains to your financial life. And a lot of times we find these hidden nuggets there, and we'll update the plans and make sure that we've got great communication with our clients. And that's something that actually we pride ourselves on, because more than half of our new clients come to us by referral each year.
You tend to keep your clients for the long term?
Yeah, for the long term. We have very low turnover here. We've got a great relationship with all of our clients. Some of our clients call us weekly to know what's going on. Other clients don't need a lot, so it really depends on their needs. but I think we have a great relationship with our clients, and that's something that we've really worked hard to build on. So we're pretty proud of that. Our service team gets accolades all the time. I get compliments to give to the team from new clients when we've taken them on board. And we've got a great team here where they really just handle them with care. So it's a really good process.
Well, I can certainly attest to that. Your team is really good.
Thank you.
I've had nothing but very positive interactions with your team, and particularly I've interfaced with Marissa a lot, and she's just great.
Yeah, no, I appreciate that. I'll let her know.
She should. She deserves to hear it.
Yeah, thank you.
How do you, as I know some of your clients, and you have clients in different positions in life, different positions in business, different net worths, different wealth profiles. How do you tailor your services to meet the unique needs of people who might be as varied as business owners or retirees, or they have family issues to worry about?
Sure.
How do you approach that?
So I'd say that the bulk of our clients, as far as volume goes, would be mainly people who are getting near to retirement or who are in retirement. And most of them have very similar needs, but just different lifestyles. We don't cookie cutter anything. Some people need more help with tax planning. Other people need more help with their investments. Some people need income plans because they just don't have any pensions or anything like that. Maybe they have very little Social Security. So we tailor it around really what they're needing, not really about net worth. The people that we typically have to tailor those services for would be our ultra high net worth clients. Those people typically need more help with regard to tax planning, with regard to estate planning. You just mentioned it, businesses. We've got a lot of business owners, so we help them with respect to tax planning again, how to grow the equity within the business. And then ultimately, I mean, we'll do valuations for businesses. We can help them sell. So those types of net worth, we typically do tailor our services for. But the bulk of the prospective clients out there would probably fall within that regular big picture blueprint type of planning because, and that's really, by the way, why I created that is because it does have those 5 pillars of financial planning. You've got the income planning, you've got tax planning, you've got healthcare planning, investments, and as well as legacy. So that really does handle most people. It's just about the strategies that we use within that model. That's what will typically differ between one client to another.
I noticed that you've been quoted in places like the Wall Street Journal, US News, other places. How did those come about, and what kind of difference, if you can tell, has that made for you?
Early on, I used a promotion firm to get us a couple of interviews, but most of them, it was really where the reporters were calling and needing a story. We did some for the local news here too, like around when Brexit took place back when. And really, once you do one or two, then your name's floating out there anyway. So they were really fun to do. And I've got one reporter who wants me to do something for them on another topic here this week. It's nice because it gets your name out there, and it's credibility certainly is a good thing in the industry, but it doesn't do a lot to get new assets or new business or anything like that.
You never had someone call up and say, "Hey, Michael, I saw you in the Wall Street Journal. Will you manage my money for me?"
No, 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 that's funny. And it's funny because one of the biggest problems that I ever had, and you wouldn't know it to look at me now because I've got all this gray hair, is because when I was younger, I looked very young. And now I've earned this weight and this hair, believe me. But when I was younger and I was just starting out, I looked really young. But then I was a part of that team that did a lot of advanced planning. So that was one of the tough things about me back then was I was sitting there going, gosh, when's my hair going to turn gray? Because these people don't think I know anything. And yet I did. So anyway, I really
I
did.
know I can relate to you're the young kid, and it's like, how do I get taken seriously? And then like you blink and it's like, when did I get old?
I know. Now I would love to go back.
Yeah, I'm sure that's something that anybody over the age of 25 can relate to.
Oh my gosh. You're not kidding.
I know that you're a Christian and that that's important to you. And I'm wondering if that is something that informs or influences your professional practice.
Well, it does definitely, you know, and morally, I mean, just about trying to do the right thing for people, whether they think it's the right thing or not, because we will have a lot of ideas shot at us by prospective clients and even current clients that I have to shoot down. But it's really about it's kind of like that doctor analogy I used before. It's kind of like that do no harm oath that they take. And obviously we want to try our best to do the right thing always. I'm human. We all make mistakes here and there. But I think that that's what it is, because I'm not, I do this to go to work and make money for my family too. But that's not really what it's about when it comes time to make a decision for a client. It's really all about them. And so I think that that's how my faith really guides me in the long run.
Uh-huh. Do you have any interesting anecdotes about where a client came to you and wanted to do something and you thought that it was really a bad idea and either were able to talk the client out of it or unable to, and what happened?
Yeah. Yeah. I mean, we're in South Florida and we have clients nationwide and in various states. And when you've been doing it for this long, you've heard some doozies out there. I had on a religious note, I had a client, and this is in the book too. I had a client come to me and wanted to cash out all of their money in 2021, or maybe it was 2020, because they said that this was the end times, that this was, the end of the world. And I had to remind them as a Christian, that no one knows how long the end times will take. And so they ended up staying in the market and they made a lot of money as a result of that. I would say that for me, as an advisor, I'm not a yes person. I'm not a yes man. I'm not there just to say yes. Using the doctor analogy, if I was a doctor and you came into my office and you said, well, I think I broke my foot, and I did an x-ray and I looked at it and I said, well, you did indeed break your foot. And I said, well, maybe you need to wrap it and put a boot on, stay off of it, keep it raised. And then maybe your suggestion to me was, well, hey, you know what? I could do that, but maybe I'll just go run around the block a few times. It'll probably just go away. And we may or may not work together as a result of that. Just
Uh-huh.
like a doctor wouldn't want to take that liability on. So I can't remember a lot of specific issues of clients having some interesting ideas, because there are quite a few, but I would give you that as probably a pretty good analogy of what I
Uh-huh.
what I sometimes hear.
Do you have any thought about what the most outlandish suggestion from a client that you had to talk them down from might have been?
Oh, yeah, I had a client who had about 1.5 million in their portfolio. So it was a decent portfolio, maybe about 2 million in the portfolio, and wanted to sell all of it and buy a Bitcoin with it.
Remember?
I can't remember. It was probably 2, 3 years ago, something like that.
Uh-huh.
They're retired.
And this is the whole net worth.
That was of their liquid net worth. They had a couple of properties, but that was about it. That was the liquid net worth.
Yeah, I'm sure you did them a favor. You talked him out of it.
Yeah, I think they ended up investing maybe 100,000 or so in it, and of course they don't have that with us.
Do you have, in light of the various things we just, do you have like a way that you conceptualize what you see as success?
I see success as trying to do something that you like, helping people, having money in the bank for it, and then also having a very happy household. So
And I think
good family ties too.
I think I know you well enough, Michael, to know that by that measure, you are pretty successful. And
I like to think I am.
And I want to ask you, with all of that success, what's your biggest challenge today?
Finding enough time to enjoy the happy household because we have a pretty successful business. So. But of course, every time I'm there. Actually, we just got back from a really nice trip my wife and I were on. So we're starting to make that happen.
Nice. Is there anything that you wanted to share with us that we haven't discussed?
I don't think so. I think that you've asked some great questions, and it's been a really great conversation as always.
All right. Well, thank you. Where can our audience go, Michael, to learn more about you?
Sure. We have a website. It's www.L as in Larry, F as in Francis, P as in Peter, financial.com. So lfpfinancial.com. And then we have links to some of the articles that I've written there too, and a little bit about my background and also the purpose at the firm, our financial planning process. So that's a really great resource.
And you want to mention the title of the book again and where people can find the book?
Sure. The book is on Amazon, and it's called The Big Picture Blueprint for Retirement Planning.
All right. Was there anything else you wanted to add?
I think I'm pretty good.
All right, great. Well, thank you so much for joining us, Michael. I really appreciate it.
Absolutely. I appreciate you having me. Thank you very much.
Thank you.
Thank you for listening to another episode of Sterling Insights, Stand Out and Supercharge Your Assets, where we provide the info you need from successful leading financial advisors, lawyers, and CPAs. Your hosts, Roger and Catherine Silk, invite you to learn more about Sterling Foundation Management by visiting sterlingfoundations.com.